Hello everybody, what's up? How are you doing? Hope everybody's doing good. It's another time we meet here at Getos FX channel. Trying to break down and give you the top-down analysis of the trade which I just closed very much recent. It has been one of the very beautiful business which has made about $5,280 with two entries. Actually, I took two entries since last week. I entered this trade on Thursday last week, with the first entry giving a total of 144 pips and the second entry with about 50 pips. So it makes a total of at least 20 pips. I entered this trade twice, with the first entry with 5 lot size and the second one with a 3 lot size. Like literally, you guys could perhaps see I shared it on my Insta story, on my Instagram story, as you see here. I posted it yesterday. The first entry was here, and then I shifted the stop loss. Of course, I've had to break even after I have seen that the trend and the market is going very much better and good as it was being anticipated before. So now I'm going to take you through the top-down analysis, at least to have a review of what I have been looking at before I took this trade. So I remember the first time I took this trade, I bought it early. I bought it early around these areas at daily time frame, hidden WLL liquidity, and I was stopped out once. So I normally don't take a revenge trade, but I only revenge a trade if I see all the conference are being confirmed that the market is going where it goes. Of course, I would say that I entered it early, but it makes sense where I entered early, because here you see we have had a support, we have had a resistance, so it was making sense. But then price came all the way along here down to follow the lows of a daily time frame structure. With here down you have a beautiful morning star and the hidden COC. This is where the first entry was actually taken. So let's look at the chart which I posted on Thursday before this entry was triggered. Here's where price was on Thursday. It was August 16th, and the moment that price came to retest at these daily time frames lows of structure in this morning star. So here is where I got a confirmation, and after all I got a confirmation by looking at 3 hours morning star. The moment price get into the area of interest, there was a formation of this beautiful morning star. As you see here, sellers dominated the market. Eventually sellers power get exhausted, and then buyers then took over the market. So after the confirmation of this morning star, then I entered through market execution, because during this time I was very active in the market, and of course I have had my other orders being my alarm was giving me the alert that now really the price has just reached the potential area for a reversal. So let's go and look at what's been looking from the higher time frame to the lower time frame, to add more meaning into what confluence actually facilitated the taking long of this trade. Right now, when we look at this market from the higher time frame perspective, if you look at it from the higher time frame perspective, of course, yes, current time, this price is in the higher time frame consolidation. If you look at this market from May last year to date, this price is within this consolidation. But within this consolidation, there's a bigger picture which perhaps you're supposed to look upon, so that you can add more meaning into the trend of the market. This market is bullish. If you don't understand the language of the higher time frame, you could perhaps see this market started to sell since December 2022. Then this trend was merely a retracement, followed by the shift of structure which happened here during November 2022. Market structure were bearish, like we had lower lows and lower high, lower low, lower high. Eventually, the moment we have had a higher high, then this shift, price needed to have a pullback so that could have a push going up forward. That is number one. And number two, you see we are having these hanging wicks rejecting here at the levels of support and resistance from the monthly time frame, followed by the bullish structure giving the high low, high high, higher low, and then a continuation to go low. After all, if you look clear at this month, it was May this year, May, April, and March this year, we are having two confluence here which are adding meaning to this market continue to go along. Number one, you are having this beautiful bullish engulfing candle which engulfed the 1, 2, 3, 4 candles consecutively, indicating that buyers are very serious and they have injected good capital to take exchange rate up forward. That means NZD is doing better than Canadian economy. And number two, you are having a morning star. All of them are the signs for bullish reversal. That's why after having this beautiful morning star or bullish engulfing in May this year, we have had followed by 2 months selling consecutively in June and July, marking the retracement of the higher time frame. Right? Something which you could perhaps see, what did it follow? Look at the weekly time frame. If we look at the weekly time frame, now we could see the sales of June to July merely came to retest the liquidity engineering of the weekly time frame, which all in all giving us a supporting confluence that this selling is over after we have had this bullish engulfing candle or tweezer bottom candles of the weekly time frame alongside the liquidity engineering. In all candles closed above, neither of them closed under. Then what followed next? What followed next was this beautiful bullish structure from the weekly time frame. We had a higher high, higher low, and then higher high. So that was very much simple. You need to have a higher low so that price could continue to push above, right? Then if you look at the daily time frame now, things will add more meaning with what I've been speaking at the beginning of this webinar, is that when this price was selling, after observing that now we are having a very beautiful daily time frame bullish structure, you have the high, the low, the higher high. So that's definitely simple. You need to have a higher low so that you can push it above, right? And the only liquid that this price followed was this morning star and the hidden COC are located at the lows of the structure, which were by then located at the daily time frame price floor and the price ceiling zone. Some people just argue like, okay, if you're going to take a trade from the day time frame is one of the higher time frame, then how about risk to reward ratio? So risk to reward ratio has two potentials when you set your stop loss. Number one, stop loss should be based on the structure formation. Number two, it should be based on the value, on the money value of the pair. You know, some of the pair are very highly valued in terms of pips in relation to dollar. Others are very less valued or volatile. So you need to understand the ratio of Nzdcad is how much percent before you set your stop loss. And number three, taking a trade from the higher time frame, like this one is a daily time frame, I just normally use 40 pips as a maximum stop loss in terms of risk to reward ratio, and a minimum of 35. It depends with the structure formation and where I have structured the entry. And after all I said, this trade I took it out of the daily time frame. Perhaps you see here, let's look here, let's see here. Here's where I took this trade. Once I found out that within the zone, the area of potential area of interest, when the price was in the drawdown, in the 3 hours, there was a confirmed morning star at the area of interest, something which triggers and give you enough confluence and confidence that this price is really ready to take above. Don't forget, this is Gatos FX, right? Now, then on Friday, this candle closed above the area of interest. This is where I added another position after wanting to see we are crossing over and above the previous structure. You know, if price is in the continuation of the trend and has already completed the liquidation of the lows of the structure, perhaps we are becoming very confluent and confident that we are going to break the previous structure. That's why I hope that this structure, which acted as a resistance, could perhaps come back to act as a support, and then the price will continue to push above. And that's definitely what had happened. That's definitely, as you see, The moment price reached the same area, then I added another position and price pushed up above as it was anticipated. So let's play the price and add more meaning. What the lesson here is that this business requires you to be very much patient. Patience is very much important, but nevertheless, you need to understand what you're doing. Like, you need to really know how to read the market, to interpret the movement of the market structure, to understand the destination as where the exchange rate is going. That will make you more profitable and consistent. Don't forget to follow and subscribe in my YouTube channel Gatos FX, as well as my TikTok Gatos FX, Twitter OX, and Instagram page by the same name brand Gatos FX. See you next time. Thank you.